Now, I wanted to go over the second half of the intro to risk video and basically go over another way of looking at risk, which I think is very relevant right now, and in fact, financially very material, from very much almost a going concern level. Um, and this is a KPMG report on their approach of a vision of true value. And this combines a few different things: risk management, ESG reporting, corporate social responsibility, but also an idea of trying to look at the risk of the business and optimizing some of the risks. So I'll post this report and we'll go through it and work through it throughout the semester. Now, what does this talk about? Basically, the age of internalization is here. What they're talking about is kind of this chart of in certain industries, there's negative externalities, and this is, could be environmental, could be societal, but this is how many billions of dollars are these externalities are worth. So this is talking about 2010. So we're talking about $670 billion in the oil industry, $482 billion in the telecommunication and industry, $223 billion in electricity. So it's like, who's paying for this, right? So right now, nobody, and that's why it's going out there. But there's pending regulation, and this is basically starting to be valued and addressed. So now that's what the age of internalization here is, that it's like no longer something that the planet will pay for, is going to be something that we, the different countries, including France, recently adopted this. Each company has to address. So now we basically go through and understand the future, the earnings at risk. And that's something that this report will address as well. And what is the exposure? How do you quantify the risk of earnings? And then how do you approach the risk reduction strategies? Now, before I go into that, I wanted to go back to the table of contents and show you that what is driving this. And I know this is kind of an inflection point where just like I think 5 years ago, this would have seemed a little bit ludicrous. In a year or two, it was like, oh, maybe this is happening. But this is the year where this is really happening, and on many levels, and it's kind of, a lot of companies are already getting on board with it and very early adopters. So how do we look at this? So what is causing this? And this is a really nice chart that really, it's coming from these basically drivers, social and environmental mega forces that are driving this situation. I know this is on a macro level, but it can really help to see what is going on. What is the theme that we're in right now? Population growth, wealth, food security, ecosystem decline, deforestation, climate change, energy and fuel, material resource scarcity, water scarcity, and urbanization, population growth. So these factors are interconnected, and they're all driving the situation. Now, how are they driving it? I'll show you. How are they driving it? Through regulation and standards, stakeholder actions, market dynamics. Now, what is regulations? This is governments passing legislation, tax instruments, and pricing mechanisms to basically put a value on some of these externalities. For example, California, cap and trade. There are schemes that are becoming active in various places. In the state of New York, I believe Governor Cuomo recently said that 50% of New York energy will be renewable by 2030. So he's effectively saying that we're going to cut this externality in half in the state of New York. So of course it's going to affect companies, because there are already New York laws that are going into effect that are local here, that are changing the dynamics of the industry in a major way through regulation that they're passed in the New York Assembly. stakeholder action. This is NGOs, civil groups, communities, workers are increasingly acting to protect their interests. As is done a lot in New York, there's a lot of activity. I've noticed that some of the activist foundation, even some activist investment companies, as in Exxon's case, actually forced them to disclose their effect on climate in their annual report by voting over 50%. So that's a stakeholder action example where, hey, now they're forcing them to value, forcing them to disclose, and forcing them to address. And it starts in the financial report, and then it migrates to the balance sheet and then income statement. So this is where things are now, and it's very curious how to kind of like get acquainted with this risk. But it's very much, from a financial risk perspective, this is very much material. Again, as we look at the numbers, they're in the billions here. So the three drivers of internalization are basically regulation, market dynamics, stakeholder action, and they're driving the revenue costs risk. And then the question is, the outcome now is basically to create corporate value, but really from an overall perspective and not just financial, because the dynamic of the 10 main items, which we see here: deforestation, climate change, energy, fuel, material, water, population, wealth, urbanization, food scarcity, ecosystem decline, is driving the regulations, market dynamics, stakeholder action to basically move things around, and things are moving very fast right now. So this is just an intro. I'll post this report, and we'll actually have our discussion on this as well. What I want to have you all do, and I'll send you a message about this, is research a company that you've been tracking, or a company of interest to you. It could be financial or it could be non-financial. And just write up a note for us saying, how have these items affected the company's policy on risk management? And this could include the management of its reputational risk, of its environmental risk, of its governance risk, as well as the financial risk regarding earnings that are due to regulation. So please take a look at this, and I will post a discussion note that will be due on the 19th regarding this.